What was really important is Lyft said that they might be able to ease back on incentives in the current quarter. Does Uber have to come out and say the same thing? Do you think that they'll be able to?
I think they do have to increase incentives, and I think Uber will do the same. The fourth quarter is a very interesting, different quarter for the ride-sharing companies because, number one, they're used for a lot of holiday parties and used on the going out at night and all the things that happen late in the fourth quarter and those. So they've got to do that. The few wild cards are: what's the weather going to be? Are we going to have an epsilon virus? And fuel prices, frankly. Fuel prices matter to drivers a lot, ultimately. And if you have to keep doing what they've been doing for the last 2 months, then you might see some weird behavior on supply and demand curves.
What kind of weird behavior? If fuel prices remain high or go higher, does that increase the chances that Uber and Lyft are going to need to provide further incentives? They have to kind of go back on what they said?
They might have to, because if the driver feels like, well, last month or so, 3 months ago, a $20 fare yielded me $12, and now that my costs have gone up by $2 per ride or $1 per ride, well, then the economics are different. You have to adjust accordingly.
I think it's really interesting, Emil, that in the quarter, Lyft had fewer active users, fewer active riders, but prices were higher. And I'm wondering if you think the same thing is going to hold true for Uber and what you think of this trend overall. Is this just going to be what ride sharing looks like post-pandemic?
That's a great question because I actually think that that might be what the new world is, that prices are higher. In a lot of cities in the U.S. now, they've regulated sort of a minimum wage per hour for drivers. And when the company doesn't hit that minimum wage, they have to make sure they're paying the driver at least up to that. And what Lyft showed today, which I thought was fascinating, is like you said, with fewer active users, they did a lot more revenue and more EBITDA. So those are pretty good metrics to think about, like, hey, well, maybe this higher price model actually is going to drive more EBITDA. And Lyft's EBITDA went up about $40 million to get to $67 million this last quarter. So that's pretty compelling. It's the first big, reasonable cash flow quarter that Lyft has had. And I hope you see that at Uber as well.
Although it does sound, Emil, like you're seeing Uber under pressure from Lyft's efficiency and also maybe some pressure from DoorDash on the Eats side.
Yeah, so one of the things to measure that I'm going to look for tomorrow is that Uber's whole ride business globally does about 3 times what Lyft's ride business does in one country. So it's inefficient. That's sort of the definition of inefficiency. And if Uber doesn't fix that, then the multiple it's going to trade at is just going to kind of be below Lyft's at some level. And at DoorDash, the interim numbers you get from the credit card companies that release the data, it looks like Uber's losing market share to DoorDash in the U.S. So those are not great trends. I could see them, but we'll see what happens tomorrow. Maybe they pull the rabbit out of the hat.
So, Emil, today, as I look at Uber's stock price, $46.05, about $1 above that IPO price. Lyft is well below its IPO price. Should we expect them to trade around here? I mean, what is the value proposition for an investor, especially one that might have bought at the IPO that have seen them do nothing or lose value? What is that catalyst that will sort of get them going, especially if we talk about this sort of new environment where the costs are higher and they essentially look like ride-sharing looks like taxi companies?
There is a problem. I don't think there's a lot of investors who love the dollar return after 2.5 years after an IPO. So I think, the catalyst could be that we don't have a COVID situation more broadly next year. Drivers come back and normalize. Uber and Lyft both do better pricing, so they kind of try to hit a sweet spot where they're not high, but they're not losing money because they're too low and fighting for that last inch of market share. If they can do that, the synergies with food delivery, even if they're behind in the U.S. on that, could be a nice business, right? But it's about time. The company was established in 2011, so 10 years later, you want to have found the synergies and found the sweet spot on pricing and supply and demand.